You are watching TheoTrade. This is Don Kaufman. It's May 23rd, 2016. We are just a few minutes after the close of what has been a very quiet trading session, what I would consider, and compared to what we've seen lately, a very, again, quiet, kind of an inside trading range day. Ultimately, including overnight trade, we saw a move from only 2043 to 2056 in the S&P futures. And really the only move that came in today's trading session was towards the end of the day when the S&P faded a bit. Now, don't just step back and think that this is going to be an ultimately quiet week here. We have Fed speak all throughout the course of the week. What does that mean? Well, all of our Fed presidents all over the world having conversations, even in the middle of the night. Few of the Fed presidents are going to be over in Asia talking. Any of this can cause dramatic movement to the market. Again, later in the week, we're even going to see some GDP numbers. So again, don't step back and think this is going to be a quiet week headed into a 3-day weekend. Of course, we do have the none other than Memorial Day weekend upon us, the beginning of summer. But I believe this is going to be a bit more volatile this summer. Nevertheless, tonight we look at a trade in an unlikely place. Microsoft, a product that I have followed for quite some time. I have traded in and out of this product hundreds and hundreds of times over the last couple of years. So it's a product I'm fairly in tune with. And to me, this is a bit of an unusual trade. So I happen to be what is termed a contrarian. And that means very often when you see a product rallying substantially, for instance, Microsoft back a couple of months ago rallying substantially, this is when I would look to fade a product, or for instance, take a bearish position when a product is rallying. Vice versa, when you get some product that's just headed into the dumpster head first, okay, at some point those may be effective purchases. However, Microsoft is in a formation right now where it is aligning and flirting with the 50 level that it's only succumbed to and closed under 50 just a handful of times, okay, in many, many months. As you're looking here on my 9-month kind of price chart over here, again, I'll just quickly sketch out where we are, where we could be, where we have to be, and where you might want to consider a trade. So again, just boxing in Microsoft's range over here, we're aligning right to the 50 level. At this point, it does appear that Microsoft is going to breach under the 50 level. This is what I kind of call, again, we're consolidating, aligning to take this move lower. All right. Now, how much lower? Well, that is not going to be so much of a topic of conversation for the type of trade that I'm going to place in this particular case. For the most part, anything lower is going to be positive for the style of trade that I'm going to place. So with that, I am looking to initiate a bearish spread inside of Microsoft. For the record, I am already carrying a bearish position in Microsoft. I happen to be short none other than 600 shares currently in Microsoft in this particular account. So I am short the outright shares. I don't have intention to adding to those short shares. Instead, I want to take a short-term bearish position, and that's really what I'm going to elaborate upon. And when I want to take a directional position, I always go back to what I call the well. You use the same trades again and again. Trading, it's not about being directionally accurate. You have got to use the right trade logic and the right strategy along with good criteria. Okay? The directional bias is very much secondary. Use the right trade logic, the right criteria time and time again, and these trades will start to work for you. So I'm going to open up the 32-day options, giving myself up just about a month of time. And in this case, Microsoft, it's a $50 product. It's just got tons of strikes in the 50s and the 50 and a halves, all right? And again, strike price increments every 50 cents gives all the flexibility and all the variability you could ever want. The liquidity in Microsoft also totally viable. So in this case, when I want to be directional, I tend to use an in-out spread. And that means I'm typically buying about one strike in the money and selling one strike out of the money. In this particular case, that amounts to buying the 51 puts and selling the 49 puts against it, again, in the 32-day expiration. The trade right now is such that it's pricing at about 92 cents. Now, for any of those that speak option geek, and if you don't speak option geek, that's all right, but the intrinsic value, that's the real value of the 51 puts, is already 98 cents. So in this trade, again, if you speak a little bit of option geek, we're being capable of buying the spread at under the intrinsic value. What that basically means is there's absolutely no time value in this spread, which also equates to then there's no initial volatility risk. So people always say, well, the volatility is this and the volatility is this. Well, this spread negates volatility risk. It negates time risk. Time decay is not going to negatively impact us. The spread becomes profitable near expiration if Microsoft is below $49. But we're not here to try to gain, a full $2. It's a $2 wide spread. The most you can make is $2. The most you can lose is what you're paying for the spread, which in this case is about 92 cents. So what are we really trying to do in here? Like, what's the ultimate goal? Well, again, if we have about 92 cents of, and we're going to term this the risk in the trade, we're trying to collect anywhere from about 55% all the way up to about 65%, of the 92 cents of risk. So you're entering this trade, right, for, again, a debit. This is not a credit. It's a debit. We're buying the spread, but we're not paying anything for time. So you enter the spread for about 92 cents of risk, and we should be able to exit this thing right in the neighborhood of about $1.40. Because you're making what? Just about, 48, 50 cents on here, $1.40, anywhere between $1.40 and about $1.45 is probably our target kind of exit, which fits to a degree inside of this, 55 to 65%. Now, the reason that we exit the trade, and you're like, well, I'm only going to make 50 or 55 or 60% on the trade. And but the reason we exit the trade, and you do so, and you don't hesitate to pull the trigger to exit the trade. You don't get greedy. You don't wait for $2. The reason we do that, take a look at the probability of touching. And the probability of touching is the probability of touching the 49 level any time between now and the 32-day expiration. And that equates to almost 75%. Again, this trade has a very high probability of hitting our target exit price, which is about 55 to 65% profitability on the spread. And that's why these trades, am I, again, being directional? Absolutely. Listen, this is a bearish trade. If you're not bearish on Microsoft, don't step up to the plate. But if you're a little bit bearish on Microsoft, you want to kind of reduce your risk and you want a decent probability, all right, making some money on it, this is the kind of spread that you might want to employ. It again, it's an in-out spread. We've done tons about these trades, and it's kind of my go-to directional trade here at TheoTrade. I will be executing this trade along with many others right here in the Theo chat room. We'll be doing it tomorrow. We've also got our coaching session coming up tomorrow, which is going to be part 3 of bonds. If you've ever had an interest in trading bonds, understanding bonds, if you do not know what a yield curve is and you're into it, well, we covered that in part 1, part 2. Tomorrow, part 3 of bonds. We're going to be talking about, again, trading the bonds, making them effective positions for everyone. Because, hey, what's in play right now? This is a world surrounding debt markets. Thanks a lot, everybody, for joining us here at TheoTrade. My name is Don Kaufman. We will be on all throughout the course of this week. Have a good evening. Bye-bye.